timelines.
Yeah, and great summary, Aaron. And I did want to point out, like Aaron has said, the timing of this delivery and will or will not delay closing and for what reason and whatnot. Understandably, real estate agents have a lot of questions about this. So as we put up, I just put a instruction onto the presentation. We'll remind you again at the end of this, but if you have questions that are specific either in general before this rule goes into effect, or absolutely if you have live scenarios when we get into October and November, send those over to Melissa DiCarlo, and I've shared the email address. She will consult with our team here at Renasant and make sure that we get you what our opinion of that answer would be in a timely manner. So I just wanted to throw that out there because I know this is a topic that a lot of people have very specific scenarios they want to ask questions on. So we'll remind you of that at the end, but just FYI.
And a few final notes on the timing. So that I've talked about that 3 days prior to close window where you have to give them that CD. But then there's additional timing requirements that come in if you have a change within that 3-day window. So let's back up a second. We have a CD that we sent out. It was at least 3 days prior to closing. During that 3-day window, some other change occurs. Does that change cause a delay to my closing? Well, it depends. If that change increases the APR more than an eighth, or more than that percentage right there, 0.125, if it increases it more than that, then there will be a delay. You have to issue a new closing disclosure and wait 3 additional days from the date of that new closing disclosure. If that APR does not increase more than 8, then there is no delay to your closing. You can go ahead and just issue a new CD, updating that fee, updating that change, and then close the same day you were always scheduled to close. There are some additional items that can delay a closing, but these should not be applicable with Renasant, and I foresee them being quite rare. They include items such as adding a prepayment penalty or changing the product. Now, the next few slides actually are just an example of what we talked about. I know sometimes the text and just a verbal explanation is a little bit tough to comprehend. So I know sometimes an illustration can help drive the point home. So this is just a very illustrative calendar. Of course, just an example. This isn't necessarily what will actually occur in a transaction, but just for purposes of illustrating the different timelines under the TRID regulation. So in this example, we have an application there on the 2nd. Our application is complete. So then we have 3 days to issue that loan estimate. So we count out our 3 days. And by that 3rd day, we issue that loan estimate. That loan estimate goes out. File continues to be processed. We continue to work through the mortgage loan transaction. Then we get close to our closing. We realize when we like to set our closing. In order to meet that closing, though, we have to realize we got to issue that CD at least 3 days prior. So we go ahead and issue that closing disclosure on the 12th, and then that will let us close on the 16th because 3 business days will have elapsed from that CD. So we get to the 16th, we could close that day, but let's say we have a change that occurs on the 16th. Some new information comes in. Will that delay my closing? Well, like I stated previously, it depends. If that change increases your APR more than an eighth, then we have to put a new CD out there and wait 3 additional days before we can close, and we'd close on the 19th. However, if that change that happened on the 16th, the day of closing, didn't cause your APR to increase more than an eighth, then there is no worry. You can just go ahead and issue a new CD that day, kind of update that fee, let them know what that new change was. But because your APR did not increase more than an eighth, you do not have to delay your closing and can go ahead and still close that day.
So from a procedure standpoint, if you can talk with your lenders and talk with your buyers, if they can get us income and asset verification, 2 forms of ID, things of that nature, when you bring us a contract on Monday the 2nd, then they can, in fact, go ahead and start submitting that file to underwriting the first week that it's issued once we get their signatures. Some of the common delays that we all know of is that someone may hang on to their bank statements, or they may not be able to locate their tax returns. Maybe their driver's license is expired, things of that nature. So as a real estate agent, while you're communicating with them and looking at different homes and driving them around in the car, make notes with them to go ahead and start proactively selecting a lender, getting documentation to that lender so that when you go under contract, you have your 3 to 7 day home inspection then at that point we can order appraisal, so we can all be ordering these things simultaneously. But the biggest delay that I foresee is going to be the income and asset verification, when the home inspection is completely negotiated, when we can order appraisals, so that we can go ahead and get all of our fees in order, make sure we have the correct loan program, make sure that we have them headed down the correct road with deposit and down payment verifications. So just let the client, let your buyer understand that the first 2 weeks of the process are more important to them than it is in the current environment where it's the last 2 weeks of the process. We want to kind of reverse the roles of everyone so that we can facilitate all of the knowledge in the first 2 or 3 weeks rather than in the last week of the transaction.
Excellent points, Melissa.
And to that point as well, two of the other items that sometimes get us caught up and cause a delay can be title and insurance. So when those requests come out from the lender to get that information, just coordinate with the parties as best you can and make sure they understand the urgency of getting those in here. We may be asking for those items pretty early in the transaction, but that is by design because we do have to meet those timing requirements. And if you miss one thing, it is in some ways a waterfall effect and everything else gets backed up. So when requests go out for the type of information that Melissa mentioned, and then also for any title or insurance information, that needs to come in as quickly as possible as well in order to meet these closing dates and stay on track with that calendar.
Yep, great points, and really a perfect transition to our closing slide here. Again, trying to take it back to you. I'm a realtor, and what does this mean to me? What the closing disclosure, what does it mean? And I'll summarize on the left side probably the most repetitive questions that we're getting as a mortgage lender, from the agents, and they are: how can I help avoid closing delays? When should we incur costs such as termite and survey? When should we have a final walkthrough for punch list items on new construction? Can we have simultaneous closings? And back to that initial question, can we write 30-day contracts? And really the answer to all this, and one of the biggest points that we want to drive home at Renasant, is that we absolutely have to move everything that has typically been at the end of the loan cycle to the beginning. And things that Melissa and Aaron just touched on, but that really details over to the left on these questions as well. The more that we understand and the quicker and more that we work together with our partners to obtain information earlier, if you do that successfully and the mortgage lender that you partner with has the technology and the systems to help you be successful in that, we predict that there won't be as many delays and things like that you're hearing about. There's a lot of doom and gloom out there. What this accounts to is good communication, working with the right partners, and being prepared. So we really want to stress that when Melissa's points were great, if you can help us as realtors to prepare the borrowers to understand a little bit of what they're going to expect and to understand the penalties and delays if they don't perform early and come prepared early in the process. You as a realtor and us as a mortgage lender has never been more in line in a partnership to achieve the same goal. So that's one of the biggest things that we're trying to communicate to the field. One note that I put out there is that the NAR actually put out an excellent Q&A broadcast that came out in late July, and it's still posted out at realtor.org. Many of you may have already seen that, but if you haven't, take 30 minutes and kind of view that. I thought it was excellent. And then again, as it's specific to the local Birmingham market and things that you're either have anxiety about or are coming up in the next couple of months, we would love the opportunity to, Melissa can receive your questions and to respond to those professionally and accurately in a timely manner. So we want to be that partner for each of you because we're all kind of going through this process together. So that completes our presentation for today. On behalf of Melissa DiCarlo and Aaron Thomas, I'm again Mark Harmon with Renasant Bank, and we look forward to tackling this next challenge with you and succeeding together as well. Thank you.